Hey guys, Billy here once again with another trade recap. This time, gold. Um, I'll take you through my simple process for establishing a daily bias, how I analyze the hourly market structure time frame, and ultimately how I got on sides for a profitable short on gold Friday, May 30th, excuse me, during the AM New York AM trading session. So just to start off, we always start off on the daily. We're trying to find, we're looking at the daily, and as you'll see in this particular scenario, our daily did not actually align up with our market structure time frame, and ultimately, I have more emphasis on the hourly time frame for my analysis. Um, I always want to see if I can the hourly line up with the daily. That would give me my maximum amount of confluence, but I don't need that. I just need to sort of understand. Uh, I need to be able to see a clear daily bias, but understand why it could go the other direction. And then I pair that with what's obvious to me on the hourly. So for starters, I always start off by hold on a second here. Previous daily high. Yep. Previous daily low. And I want to run a fib from the previous daily candle just to sort of see where we're at. And I want to look at any external range liquidity. We have a swing high up here on the daily. And we were delivering from a internal range liquidity, right? So we're delivering out of this daily bullish fair value gap. I expected price to go higher from here, and it makes sense to me, right? Price typically moves from internal range liquidity to external. We've got a nice daily swing high above. We've got the previous daily high above. And at the time of analyzing the market, we were trading and closing above the midpoint of the previous daily candle. Okay, so I'm done with the daily buys. I'm now moving on to the hourly time frame. Now, the hourly, I'm looking for the most recent price action where I can clearly see changes in the state of delivery with displacement, and I can see what PD arrays are supporting price and which PD arrays are being disrespected. So right off the bat, I see we have a change in the state of delivery here. Okay, and I'm confirming that by the presence of this fair value gap. That's showing me the displacement. And in fact, when we look at where price currently is, when I'm starting my analysis, we were currently trading inside of this bullish hourly fair value gap. So what I made note of was, look, if we start closing above this hourly fair value gap and we invert it, then I would then align with my daily bias, and I would look for higher prices, at least to the previous daily high. Okay, so I write that in my analysis. This is my invalidation level right here. But if we get supported by it, I'm going to run a fib from the swing high that took the liquidity, and I'm just going to start lining up anything that sort of looks juicy, right? So we got a previous daily low here, lines up with the -2, -2.5. We got a little swing low here at the -1, -1.5. We've got a lot of ways to go down. So I'm going to be. This is what I'm doing as I'm doing my analysis. I am watching price, but now I have engaged a POI, which is my number one requirement for entering on the time frame that I execute on, which is the M5. All right. So previous daily low, yeah. So that -2 to -2.5 lines up nicely with the previous daily low. So at this point, I will be starting to trade at 9 o'clock, and let me go to the M5 time frame and move price forward just a little bit. I'm looking for I'm looking for, at this point, when I'm engaged on the M5, I'm looking for a swing, or excuse me, a sweep, and then displacement back down into the range as we approach our draw on liquidity. And so, and keep in mind, we're currently trading inside of this bearish hourly fair value gap, right? So that's my requirement to start looking at the M5 time frame. And as I move price forward here, all right, so we have a sweep here, right? I'm calling this a liquidity raid. It's also looking like it could be setting up for a C2 candle closure. I don't require that, but I want to make note of how the hourly, again, almost all of my analysis is done on the hourly, and I want to be paying attention to how the hourly candles are setting up to close and what they're doing. So we have a sweep here, and that's my requirement on my time frame that I execute on is a sweep and then displacement. So where would I like to see that? All right, right here. I would mark out the series of up-close candles that took that liquidity. I'd want to see a close below that with displacement. And I also want to mark out, let's see, some draw on liquidity, right? So I have some minor sell side down here. I like that as a draw, and I will note that we have a potential breaker block right here, but I'll come back to that as we got an opportunity for a pyramid entry here. But first things first, the very next candle, we had a very strong close below this change in the state of delivery. I actually had a fairly high stop up here at the swing high, but it still gave me a over 1.5 R if I got to this minor sell side. So I entered here, starter position, with the expectation that we might get a close below this breaker, in which case I would put stop above here, the swing high, take profit down here at the minor sell side, liquidity noted. On the next candle, we've now established a M5 fair value gap. So if we were to close below the breaker, we would now be looking at a unicorn. Okay. So on the very next candle, we have a strong close below. At this point, I will reduce my risk down here to the top of the breaker, okay, and add a contract. So whenever I can stack these PD arrays, right? So we had the change in state of delivery. We had a fair value gap that did not get traded back into, right? That's very bearish. And we've now closed strongly below the unicorn. I want to try and reduce my stop loss down to something that makes sense. Okay, so at the top of the breaker, and if I can, reduce risk there and then add a contract, right? And as you will see, price delivers. It was a really nice trade. Ended up being about 1.7 R. Made sense. Now, did we go against our daily bias? We sure did. Is that okay? Absolutely. If the hourly makes sense and we have a plan, an invalidation level, and a what if scenario, then we can trade opposite of our daily bias. Hope you guys enjoyed this. And if you did, please like and subscribe. I'll be putting up all of my trade recaps on here, the good, the bad, the ugly. Hopefully we can learn together and increase our strike rate. Thanks, guys.